understand. That actually rhymes.
Whenever you're down, out in the cold.
Welcome guys to my many videos of education, teaching you guys about why it is so important in investing in property, why home ownership is more of a better financial decision than renting. I put down some points on my phone so that we're more engaged and we're on the same page. That actually rhymes. So point number one, right, is the equity of appreciation. So what that basically means is that if you are renting, for example, you take your rental money every single month, you deposit it to the account of the landlord, right? And every single month, that's what you're basically doing. Every single month, you're paying that amount of money every single month into somebody else's bank account. Versus if you actually have a home or an apartment that you're investing in, when you pay that amount of money, it is your ownership, number one. Number two, it's appreciating. So, for example, you buy an apartment flat in Midrand, right? It's a developing area, and you're paying every single month your bond, right? Instead of rent every single month, right? And now you can actually sell it in the next 20 years at a higher rate than what you actually initially bought it for. So that's what equity appreciation actually means. So instead of putting money into your rental, you're putting money into a bond, and it's actually gonna increase in value when you decide to sell it, which is actually kind of cool, especially if you do renovations and all those type of things. But that's a conversation for another day. So the second one is stable housing costs. So what happens to your rental every single year, you'll find that it's gonna increase by 10%, 5%, 2% if you notice your statement keeps getting higher and higher and higher and higher and higher every single year you're renting in a particular place. Versus you can stabilize your mortgage bond. So the price that you're going to be paying for those 20 years is the same price until you're done paying your bond, not unless you put in a higher down payment and then it reduces instead of increasing every single month. So that's something that people in rental, I know that I've also been selling rental properties, never mention to my clients and trying to educate you in terms of the difference in terms of like your rental always increases versus your mortgage bond is going to stay the same, or it's going to decrease if you actually put in a higher amount to pay it back, right? So it's a good pointer. Number three, rental income potential. Now this part gets me so excited. I did a calculation. I was speaking to a client of mine she called me, she's like, I'm looking for some place to rent. My budget is 8,500 Rand. I'm looking for something nice in Sandton or Melrose, in those areas. And I literally took out a brochure for her and I calculated that, okay, here's an apartment in Midrand. If you actually take up a bond payment and own it while you stay in it, you are paying the same 8,500 Rand and paying back your bond, which is not going to increase like I mentioned. It's the same 8,500 Rand versus you paying 8,500 Rand for rental for something that you are not even going to own. At the end of the day, it's not yours, right? So rental income potential is like a great plus in terms of why home ownership is a lot better than actually renting every single month. The fourth one, tax benefits, honey. Who doesn't want tax benefits? I mean, we always have to be doing our SARS tax returns and all those things. So what this basically means that property owners often enjoy tax benefits more than people who are renting. So the deduction of the mortgage, the interest, your property taxes, and certain expenses related to property, you actually now pay less because you are a homeowner instead of a person who's just renting, right? I didn't know that. It shocked me when I got those news, when I was like now looking for an apartment that I need to invest in. I'm like, don't you want to be saving in tax, guys? Something that's so cool. So number 5, and I'm going to be doing the other half of the 10 in the next part 2. So number 5 is control of customization. So What that basically means is when you own a property or an apartment, you have the freedom to customize. So in a flat, like for example, if you now start mounting things and you're putting pictures and I don't know what else you guys like putting up, like maps of stuff. When you move out, that money is actually taken out of your deposit. But now if you customize your own house, like I mentioned earlier, you can actually sell it at a higher rate because it has certain features that you've added in. Now imagine like something like load shedding, for example, right? You want to put up some backup power in your flat. The day you leave your flat, they're going to charge you that you've put in backup power in the flat. It's something that benefits the company and the rental company, but they're still going to charge you for customizing that place. Versus if you're in a house and now you're trying to sell your house and you're selling your house and saying it has backup power, you can actually sell it at a higher rate because now that means, guess what, you're not going to have load shedding in your house. So those are my first 5 points that I hope really make sense to you guys in terms of why looking at investing in a property or a house or an apartment that you can own for yourself with all the extra benefits versus taking up rental money, 8,000, 10,000. Some people pay something like 25,000 rental every single month that just goes into you basically paying your bond for your landlord. I hope you guys really got some value in those 5 pointers. I'm gonna give you the other 5 in the part 2, and really like take notes, guys. I'm keen, I'm open, I'm interested. DM me if you have any further questions and really just want to get to know how you can invest in your own property and actually have your own thing that you own instead of putting your money down the drain, like I always say. So part 2 coming up with the next 5 points.